Today we are going to get into Chapter 8 in our QuickBooks tutorial book, and we will cover a few different items that we have not touched on previously. So we're going to be in Jackson Supply Company once again. And the first thing we're going to practice is payroll. So you remember we had to do payroll by hand, do the calculations all ourselves. In the practice section, we made things a little more complicated for that part, but the payroll module here in QuickBooks makes our lives a whole lot easier when completing that process. So we're going to go down here to employees on our home page. So we've done a little bit in this area, but not a ton. And you see we got three tabs here: employees, transactions, and payroll. So we'll click on the payroll tab, and we are running the February 15th payroll. You see it's already set up in here. So what we want to do is double click on the payroll. Our pay period ending and our check date will be the same of whatever comes up here. Our first check number, we'll adjust that to 517. We're going to want that coming out of our cash account. And then let's see, we're going to adjust their hours. So Jennifer is salary. For Ken and Mark, we're going to put in 88 hours. And then they're each going to get some overtime. So we'll plug those in for the total hours. If we want to see what the paychecks are going to be for each person, we can click this Open Paycheck Detail button. And we can see here what they're going to be paid. In this case, Jennifer, $3,100, her salary, and then we can see the withholdings. So it's automatically doing federal withholding for us. It's automatically doing FICA, Medicare, and the state of Ohio. You can see we've got the same numbers that are in the picture on the bottom of page 6. We hit save and next. We'll go to the next employees. And if we wanted to change anything, if we saw it was doing things correctly or incorrectly, or we didn't think there was enough federal withholding, you could go in and you could make an adjustment there if you had to. But we're going to stick with what we had the software calculate for us. Next goes to Mark. And you see Mark's stuff should match the picture on the bottom of 8.7. Once we're good with all three paychecks, we'll hit save and close. Then we'll hit continue. And you can see there's all the information that we just looked at. Gross pay and withholdings. And we'll click create paychecks. Our little sounder went off. If you want to print out those checks, if you do run through printer checks, you can do that. If you want to print the pay stubs to hand to your employees, you can do that as well. We'll hit save and close. And now you see the payroll has updated to the next pay period at the end of the month and is ready to be created once that time period comes about. The next stuff on page 9, we're going to talk about a general journal entry. So I'm going to close out here and go back to my home page. So as we've seen throughout the textbook here, is we have lots of cool buttons specifically on the home page here to make our lives easier. And that we can do accounting stuff without necessarily having to be experts in the perfect journal entry? Well, sometimes you have to be able to make a good old journal entry. There is no easy button within QuickBooks. And that's what we're going to look at here starting on page 9. So in order to make a good old-fashioned journal entry that I know you guys love so much, we're going to come up here to Company and make general journal entries on the bottom third of the home on the screen there. Then we'll click that. And we're going to make a journal entry to recognize interest that we owe on some debt. So 2 months interest on some long-term debt, an $80,000 note. As you remember in the practice set, we did this exact same thing as part of our month-end adjusting entries, is we factored in the interest that we had owed for those 2 weeks on a loan. Looks like I had an extra slash there in my date. And we just put in exactly what we want, debit and then credit. So debit, remember expense accounts almost always debited. So we got a debit to interest expense. Then in the memo, recognize what it is. And the credit to interest payable to show that we owe it. See, it fills in the description there again on the second one for us. And that should match the picture on the top of page 10 within your textbook. So we'll hit Save and New. And now the next one, we're going to make an adjusting entry for bad debt expense. So you remember also in the practice set, we had the allowance method for bad debt expense, and we created a guesstimate at the end of the year as far as what we projected bad debt expense to be. So our journal entry is a debit to bad debt expense. And a credit to allowance for doubtful accounts or allowance for uncollectible accounts in this case. And then for our credit to the allowance account, because it's an accounts receivable, we have to have a customer tied to it. So in this case, we have the customer of allowance account so that we're able to carry out the transaction. And it should match the picture on the top of page 12. And then if we were writing off accounts, we could do the debit to the allowance account, the credit to accounts receivable from this window here. We wouldn't necessarily have to do it from the receive payments window like we learned in the last chapter. So once we're done, we'll hit Save and Close and go back to our home page. So we've been doing a lot of transactions with inventory here within the last few chapters, especially within Jackson, this being a merchandising business. So we had sales transactions in Chapter 6 where we were selling our product. We had transactions where we were purchasing our product. And now we're going to get into adjusting our product. So what if there's a disconnect between what we have in reality and what we have in our QuickBooks? So we can go count everything up and determine that something's off. So we need to make an adjustment to our QuickBooks so that our accounting records match what we have in reality. And this is important because what we report in inventory on our balance sheet, specifically when we're going to give that balance sheet to outsiders, or what we're going to record in our taxes at year end, depending upon our form of business, we need to have an accurate balance sheet. So we'll go to Company, or Company over here on our home page, and we're going to go to Inventory Activities, And we want to go to the third one down here, adjust quantities on hand. So I'll select adjust quantity on hand, and we're doing this as of the end of February again. Our adjustment account is going to be cost of goods sold. So if I start typing 304 for the account number, that should come up. We don't need a customer or a class. And then down here I'm going to make an adjustment to the items number 104. And you see, according to our records here, we've got 190, but we went and counted everything up and we only have 183. So if I type in 183, you see it'll make the adjustment there that we don't have 7 items, and it's adjusting the value of my inventory based on the cost of those items. Down below you see the adjustment value. And then blankets, somehow we got off the other way on blankets. We think we have 207. Apparently we counted everything up and we had 212, so we're going to add things back to our inventory, and that'll lessen the amount of our total adjustment, which is going to be down here on the bottom. Then we'll put a memo to say that, hey, we counted everything up, and that's why we are making this change. And once we're done, well, actually, let's go. So what's happening here? So here our inventory is decreasing by $77. And the difference is going to cost of goods sold. So cost of goods sold, once again, is an expense account. So we would debit the expense account, cost of goods sold. We'd be crediting our inventory or inventory asset for the same amount, and that would be our journal entry as a result of this adjustment. So whenever we're off, whenever we're making that adjustment, the difference is just going to go into cost of goods sold, so we can deduct it. And now the last thing in the chapter, we are going to talk about a bank reconciliation, and this is one of the areas that students always struggle with in the practice set, in getting a bank reconciliation to work out. So remember, we were comparing our books to our bank statement. We had to go look through everything and see what cleared through the bank, what didn't, and we needed to get the adjusting numbers equaled out at the end. So in order to reconcile the account, we will click Reconcile here on the home page. We're doing this as of January 31st, 19, so you see it's automatically updating to the next date. And once we finish this, if we would go back in, then it'll go to the next end of month date, which would be the end of February. We see we have our beginning balance. We're going to type in our ending balance, and this would come from our bank statement, as far as telling us what's in the account as of the end of the month. Down low we have a service charge, so we're going to factor that in, and we're going to expense that account with miscellaneous expense, or that amount. So that's essentially going to be a debit to miscellaneous expense and a credit to cash. And I think in the practice set we had the adjusting entry, we debited it to other operating expenses when we had the service charge. And then we'll hit continue. Now the list that they're giving us in here is the stuff that's outstanding. So the items given to us is stuff that has not cleared the bank statement. Now what we're going to do within the bank reconciliation window here is check off everything else from that time period that would have cleared the bank. And remember, we're reconciling as of the end of January, and we've got some February stuff here from the payroll that we just ran. So that can't be checked off because it hasn't happened yet as of this bank statement. So the things that we need to not check off are checks numbers 506 and then 59 through 512. And that's what we have in the list there on page 17. So I'll check off the other things. And 507 and 508 are okay. And then 59 through 512. And then also my paychecks that we just wrote. Then same thing, we're just going to reconcile and get off these other adjusting things. And it looks like we don't have any outstanding deposits. So all our deposits were recorded on the bank correctly. So we would check off everything once again that happened in January on here. And once I'm done checking off items, you see down in the bottom right hand corner, we have a difference of 0. So what I said my ending balance in the first step is now what's cleared the bank based on all the check marks that I made on each side here. That is what you want. If you have a difference of anything other than 0, you are not done. You need to go back. You have maybe extra things checked off, or you don't have enough things checked off, but you are not finished with your bank reconciliation. And remember, the list of items that are in the book are outstanding. They are things not to be checked off. So in the homework assignment, when I give you the list of things that are outstanding, those are not to be checked off. And then also, when you're getting in the habit of checking off the other things, pay attention to the dates, because you're going to have transactions for a period after the bank statement date. So those will not have happened as of the time period that we're looking at. So don't check them off either. So once we're done, we've got that 0 balance, or that 0 difference. We're going to hit reconcile now. Let the little blue wheel spin, do its work here. And you could see we could print off a summary of the bank reconciliation. We can put these reports in our file so we can see how everything went, just in case we have to look back at them later. And then we are done. And we have a completed bank reconciliation. Like I said, if I click reconcile again, now I'm ready to go at the end of February, and we will try again. So there's chapter 8. If you have any questions, please don't hesitate to let me know.